Hey guys, today's video, as promised, is going to be all about what you can do if loan forgiveness disappears. I know in the political climate now, it's causing a lot of unrest among borrowers about what the future of loan forgiveness holds. Proposed education budget cuts include elimination of existing loan forgiveness programs and consolidating to one single program that allows forgiveness after 15 years of an income-based repayment plan. The problem is, what happens to borrowers who are already counting on these existing loan forgiveness programs? Will they be grandfathered in or not? It's really hard to say, and I can't see into the future. But what I can do is talk through the decisions you can make as a borrower to determine your loan repayment strategy, regardless of what the government decides to do. So with that, let's get started. As a borrower, you have three main options if loan forgiveness were to disappear. You can either go with the new existing loan forgiveness program and follow that through, or you can choose a different repayment strategy under federal loan repayment program. And lastly, you can kind of cut your losses and refinance. So let's go through each of those options and you can see kind of how each one would impact you. The first option, to go with whatever program exists, means in the worst case scenario, none of your loan forgiveness payments that you've made now count. So you would have an additional 15 years of payments to make. However, if you can't afford your student loan debt, 15 years is a lot better than the rest of your life. The second option, to choose a repayment plan that better suits your needs, enables you to pick a plan outside of the income-based strategy. So maybe a 10-year standard repayment plan would really work better for you, and you can determine your own term and payment that makes sense for your financial situation. So regardless of what the government does with loan forgiveness programs, you can decide when you'll be out of debt. The third option is refinancing, and this is the best option for your high-income borrowers out there. Those of you who are counting on PSLF to save you a little bit of money, but in reality you can afford to pay your loans with or without PSLF. By choosing to refinance your loans, you can significantly decrease your interest rate down to 3.5–4% for variable rates, and a little above that for fixed rates. And by doing that, you save yourself a ton of interest and can more quickly get out of your debt, and you make the money that you do pay towards that go a lot farther. The other benefit of refinancing is a social one. So by choosing to refinance, you are leaving the federal system behind entirely, and you are really freeing up federal funding for people who really need loan forgiveness. Not people who it's financially convenient for, but those who cannot afford to repay their loans. People who work in public service fields that don't pay well. Fortunately, we really can't count on our government officials to do the best thing for borrowers. So it's up to us. It's up to those of us who can make our payments to do it. And it might seem unfair. The reality is you alone can help increase the amount of money available in the pool by not using your share. So that choice is yours. I would love to hear if you have any alternative options to the three that I suggested. Leave them below in the comments. And if you want to find out more about refinancing or the repayment plans, you can go to repayable.org. I hope you guys enjoyed this video, and we'll see you next time.